Well, finally, the U.S. consumer is starting to slow down their spending. So we have the retail sales report out today. That's what we're going to talk about and what effect that's going to have on housing, believe it or not, because that has a big effect on what's going on with mortgage rates. So without further ado, let's get to it. My name is Dan Free. I do this report every day to make you guys informed what's going on in the real estate. We watch all the economic news to figure out what's that going to roll over? How's that going to affect maybe housing, interest rates, and therefore. So let's get to it. We have retail sales today. If you look at the headline news, here's what it is. So this is right here. I just put in retail sales report for today, and it says retail sales rose 0.4% in June, below expectations. U.S. retail sales rise slightly in June. If you read these two things, doesn't it seem like U.S. retail sales rose 0.2% in June. Retail sales rise slightly. It's just the wording, I guess, is just a little bit different. Stocks are a little changed following weak retail sales and so-so earnings. So we have today, again, we have the retail sales report coming out. That's how much people are spending, how much stuff we're buying. And then we also have bank earnings. And I'm going to show you why all these high rates are really putting a lot of money in the bank's pockets. So without further ado, let's get over to it. We have the economic calendar for today. We have core retail sales came in. The last reading was 0.3. Retail sales were up 0.3. The expectations were to stay steady. The consumer's strong, but it actually came down to 0.2. Might not sound like a big deal, but it is. Then we go over to retail sales. That's core retail sales. Go over to retail sales in general. It was up 0.5% previously. They thought it was going to stay there. It came in less than half of that. So this is telling us the consumer is finally starting to slow down. Okay, that's basically what has pushed up prices, because we've had too much money in the system, so it pushed up prices. What's price increases called? AKA inflation. So, but I want to show you guys just a little bit of information right here. We got bank earnings coming in. So basically we have retail sales coming in low. So that means that people are starting to spend less. So the Federal Reserve is like, that's what we've been trying to accomplish the whole time. But then where the focus in on Wall Street and the markets right now is how are earnings seasons going to come in? Are earnings going to actually plummet because the economy's slowing down? Well, look at bank earnings. Those are in the headlines this week. Bank of America tops expectations. Now, I don't know if you remember from my video last week. If you didn't, I'll try to put that right up here. We had some major bank earnings last week as well coming in. They blew out earnings. So let's figure out all this. Why are banks basically killing it right now? So it says Bank of America tops expectations. Then you have Morgan Stanley beats estimates on record wealth management revenue. So all these banks, everybody's getting rich, but me and you just feel poorer because our interest rates on everything are jacking up to the moon. But the banks are loving this. Let me show you why. Here, we'll get to that in a second. Here's how much interest Bank of America pays on their savings account and CDs and everything else. So you go through here and here's what it is. If you opened up a bank account and you're getting a whopping 0.01%, we should be cheering in the streets because, we're getting some interest on our money. If you open a preferred account, if you have over $2,500, you can get 0.02%. And if you're up to a Diamond Club member, well, maybe a Diamond Honor member, you're going to get 0.04% on your return. My goodness, put $100 in there, you could probably retire. How are the bank earnings so good? Well, if you go over to here, I actually started an application just to get into this. Let's go over to how much they charge you. They charge you if they're going to lend you money. Well, right through here. Look right through here. So if you get this account right here, your interest rate's going to run you between 17 and 28%. And so they're charging you, in essence, let's say 22% on average, and they're giving us a whopping 0.04 return if we're a Diamond Honoree member for life and everything else. So I hope you understand the dynamics on a lot of this stuff. The banks, they're killing us on the interest rates, but they still aren't paying us enough money to use our money. Basically, that's what they're using to lend out to people. So they get our money, they give us 0.04 in return, and then they lend it out in credit cards at, up to a 28% interest rate. So we wonder why, banks are are doing really well right now. So that's what we're seeing in the news so far today. We had retail sales and bank earnings, and the bank earnings, they keep coming in better and better and better. The other thing we want to go over to is the recession. Goldman cuts the odds of a recession. I'm actually in this camp right now. I think the Federal Reserve, if they'd stop now, maybe if they'd stop, one cut or one interest rate rise previously, and they'd let this settle out for 6 months to a year, we'd be right in the pivots point that where they want us to be. The problem here is they're going to continue to raise rates. They're going to continue to raise rates at the next meeting. The probability of that is almost 100% at this point. So are they going to overdo it? My expectations are if they keep doing 1, 2, 3 more rate increases, they're going to way overdo it. So I don't expect that. The CME and the futures market is telling us there's a 97% probability that the Federal Reserve is going to raise the rates at the next meeting. And then from there, it's going to be basically they're going to take their foot off the gas pedal. So that's what we're seeing in the news today. So basically, it was retail sales came in, and it was actually great news for the markets, especially interest rates, especially for the Fed, because now the Federal Reserve can say, okay, maybe a lot of these interest rate hikes are helping us curtail people's spending, especially when you put it on a credit card and you can pay up to a 28% interest rate. So you think mortgage rates are high. Whoa. So let's get over to the rest of the markets, how this news is affecting the markets right now. So to do that, what we do is we go over to the bond markets. Somebody asked me an interesting question yesterday. They're like, Dan, how come a lot of people follow the 10-year Treasury and not the MBS market? And is there a good correlation between the two? So I'm going to work on a video to explain that to you guys. But if you're in the mortgage business or you're a consumer out there and you want to really figure out what's going on with mortgage rates, you got to look at the MBS market, okay? I wouldn't suggest you subscribe to these services if you're just a consumer, but if you're if you're a mortgage advisor, maybe even a realtor, I'd suggest you maybe click down below the MBS Live. You can subscribe to that down below. This is what you get, and this is what I see on my screen all day. Basically, this is basically right here. This bond right here, it says MBS 5.0. It's a bond that trades on Wall Street. Its yield is the biggest component of your mortgage rate. Okay, that's all you really need to know. That's why we need to follow the mortgage-backed security bond, not any treasuries or anything else. So what they do is they take this yield and they move it over to mortgages, and then they do some adjustments. They put in profit margins and some other adjustments. You might have heard that the Biden administration put in where if you have good credit, they're actually hurting you in regards to rates. So those are some, we call those LLPAs, loan level price adjustments. Those are based on your credit score, what kind of property you're buying. Is it going to be a primary or investment property? Is it a 2-unit or 4-unit? And a whole bunch of other things. So that's what basically comprises your mortgage rate. So we follow the mortgage-backed security, and all you need to know is right here. This number right here, that's the price of the bond. Okay, what you can't see over here is that if you squint, you could see it's in green. I have a green screen. It's saying up 16. That's great news, okay? Why? When bond prices go up, the yields come down. There's an inverse. There's a yin-yang. So we love when the bond prices go up. 16 basis points isn't really going to do much. It might drop rates 0.05% or something like that, but it's a start, folks. And that's where we are for today. So my name is Dan Frio. I know there's not much in the news this week, but I want to keep you guys informed on what's going on, especially to make in interest rates, because that is the one thing that's basically the one biggest component of this market that might make home affordability back in your range here very soon. So my name is Dan Frio. I do this report every day. I am a mortgage broker, a mortgage advisor. I serve basically the whole country. I can do all 50 states as well as Puerto Rico. So if you're out there and you're like, hey, Dan, I'd like to talk to somebody to see if I can get pre-qualified to buy a house. In my market, it's finally looking pretty good. Rates are down a little bit. Maybe it's time for me to kind of look at the numbers so we can help you analyze that. If you need a realtor, you're relocating and you're just like, I don't know any realtors in that area. We have a vetting system to help you there. Or maybe you have a bunch of equity in your house and you have some of these credit cards that are at, at a 28% interest rate. that you might want to get it paid off, maybe by using the equity in your house, we would love to help you do that as well. So how you can reach us is right through here. You can give us a call at 844-775-5626 or click the Apply Now button, not the short app. Hit the Apply Now button. Within 24 hours, me or one of my mortgage advisors will be getting you on the phone or Zoom to go over all the questions that you have to make sure you're satisfied in the products, in what we do, and basically the recommendations that we make for you. So that's it for today, guys. God bless. Thanks so much for watching again, and I'll see you tomorrow. Bye-bye.